How to trade volatile indices. Hello traders, this is Igor from FX Igor YouTube channel, and right now you're watching Dow index chart. This is the Dow 30 biggest stocks, US stocks, and a lot of forex traders like to trade indices. Do you know why? Because the indices, they have long life trend, and this is the major one reason why traders use and like to trade indices. However, very often the chart can be choppy and you can see very volatile market, and today I will talk about that. Right now, on this screen, you see the two blue lines. Why I'm putting them to that? First, a few years ago, I met a guy, he's an institutional trader, and he has, I think, 2 or 3 lines, horizontal lines on the chart, and this is it. 80% of all his work is related to fundamental analysis, and only a couple interesting price levels are interesting for him, and this is it. And that kind of traders, they don't trade always long positions trades or swing trades. Sometimes they trade intraday, but they do not use technical analysis like we do. But we can learn something from them. That's implicit. Look this. These two blue lines represents the highest price of the beginning of the day from the midnight to the US market open. Same for this blue line. This is the lowest low from the beginning of the day to the market open. As you can see, this candle here has the lowest low and the highest high of the day, and this just exists in a couple minutes. And the very interesting thing is you will see a lot of charts like this. Very patient traders, usually when choppy market is, when you have a volatile market, you will try to draw 2 lines, important price lines, resistance and support, and wait to see when price goes above or goes below these lines and enter into trade, because usually you will see then a new trend for that week, for that day, etc., etc. But before that, institutional traders do homework and they analyze from the market. And a lot of forex traders and indices traders do not do that. It's not a problem, because you need just a little bit of fundamental analysis so you will be able to trade and make trades. And that very important thing is to monitor the calendar. I will show you, for example, on our website, we have a calendar, and today, as you can see, is very, very important day. Today is a Fed interest rate decision, very high impact. We had producer price index, and it's lower than we expected. And as you can see, today we have important price news, and this is not just for forex. This calendar can be very important, especially interest rate for whole market, and you need to be prepared and to watch that. Of course, for stock market, you need, and the indices, you can go, I recommend the free website. It's absolutely free, 100% free. It's a market watch, and here, as you can see, the headline today is a Fed interest rate decision to be followed by Jerome Powell press conference and a fresh peek and a dot plot. So you can see this interest rate today on the 13th December is very, very important. But it's not like that. Here you can see, for example, all indices and how market just in the opening, how react market. Then you can see the headlines, and you can just look the headlines, because using the headlines, you will see, are there any important news that can shock the market. And how you can do that? First, the very important thing when you trade the indices is to know one interesting fact. It is that Amazon, Apple, Microsoft, Google, Tesla, they have more than 20% of index weight of the whole market. So the first 10 stocks are very important, and they push whole, for example, S&P 500. So in S&P 500 you have a 500 stocks, but the major 10 or the major several of them are very, very important. And the problem is bigger, because all that big, strong companies are tech companies. So the technology cluster, technology category is very important for whole S&P 500, because if technology companies just went down, you will usually see the S&P 500, Dow index, and other US indexes go down, because not always, but they have a big impact. So you always need to check important news for whole market, especially for tech industry. Right now, so like I said, when you trade volatile market, the first thing is to put these two lines, support and resistance, and you need to monitor every single day from the beginning of the day up to the market open, US market open. You should find the highest high, lowest low, and watch that. To very, very important thing in my opinion. Now, if we put relative strength index and just check on the 30-minute chart, we can see something very interesting. We can see slightly bearish trend. So we have high probability that we can break this support level of Dow index. And in that case, usually when you see that there's no special interest rate news, there's no some big crash in or problem or good news in US market, stocks market. If you analyze the news, see there's nothing special, so you can go and watch more technical analysis. One of the very important things is to try to see where markets bias right now. So today, for intraday, December 13th, after the market opening, I can see slightly, not strong, but slightly bearish tone. And this can give you a big edge. So you have two important lines. You have on the 30-minute chart, trend line on relative strength index. And with this two combination, you have an edge. You have, for example, you can say yourself, okay, I'm more short than bullish, and then you can have a plan. So my bullish bearish validation point can be this highest high of today, and I can tell myself I'm slightly bearish. And in that case, if the market is volatile, very, very volatile, you have a bias, you have a strong resistance, you have a goal, you want more to sell than to buy. You can wait for some pullback, or you can enter into market, or you can wait on support, but you can use any strategy. But it's very important in volatile, when you have a volatile indexes, but this is the proof for all forex market, is when you have a volatile market, you need to have an edge. You need to know, are you more bullish or bearish, and where is the bullish bearish invalidation point. When you do that, you're protected. You're protected from foolish moves that you as a trader can create. For example, this is the S&P 500, very similar because the biggest stocks are there. Almost all Dow stocks are here in 500, and you can do the same thing. You can put bullish. You can put this low and high levels here. You can go to the 30 minutes chart. You can see on 30 minutes, for example, like here, you can see the bearish tone, more bearish than bullish. And for example, you can sell right now, put the stop loss just a little bit above this blue line and go there. Of course, this is not trading advice. This is just we are talking about hypothetical moves and strategies. This channel is just educational purpose. And important thing is that in trading, it's not just to guess if it be up or down. No, it's more that you have an edge and you have a bias and you have, for example, some opinion, and you can stick that opinion. Your opinion can be wrong. Sometimes you will lose, sometimes you will make profit. But when you have an edge and bias, and you have a bullish bearish validation point, and you watch relative strength index and major trend, and when you have the feel about market, you can be much better trader, much better trader. And this is the very, very important thing. So in this video, I just want to tell you that when you have a choppy market, when you have a volatile indices, the best strategy is usually not to do nothing, just to wait. Or if you want to enter into trade, you need to have a bias, bullish or bearish. You need to put support and resistance based on the highest high, lowest low level during the day. You want to catch the trend. And if you want to trade intraday, use a 30-minute chart. If you want to trade, for example, as a swing trader, you can use 4-hour chart. For example, 4-hour chart, maybe it's not time to sell. You don't have confirmation for sell. But on the 30-minute chart is a different story. You can maybe try to sell, but of course, it's not a sure trade. But intraday, we can see that kind of bias. And of course, you need to be very cautious, because today during the FOM's decision, the market can go in two directions. You don't know which, and can be changed. The market very, very, very strange. And because of that, you need to use the protective stop loss, or maybe to remove your trades and wait to see that everything about decision. So this is it. I wish you a great day, and bye-bye.